Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Friday afternoon, we have Mark Marex, Senior Specialist with Index Research and Development at Nasdaq Investment Intelligence. We are going to discuss the new constituents coming into the Nasdaq-100 index and the ones that will be exiting. Mark, it's great to see you. Welcome back to Trade Talks.
Thanks, Jill. Great to be back with you as we wrap up this year and talking about the annual Reconstitution.
Yeah, it is a big day for your team, but I believe first we are going to take a look at Nasdaq-100 performance in general.
Yeah, let's take a quick mark-to-market view of what's been going on with the index here to date. These numbers are as of yesterday's close. Today, of course, kind of volatile. Most indexes have had a pretty wide trading range. And currently, I think the Nasdaq-100 has narrowed the gap slightly with the S&P 500 year to date. But even as of yesterday's close, you could see they're kind of running neck and neck after a year of really incredible outperformance in 2020. Where the Nasdaq-100 outperformed by about 30 percentage points. I think we were all expecting a bit of mean reversion and maybe a bit of underperformance, but it's going to be a photo finish as we head into the end of the year. I put some other benchmarks up in here. The S&P mid-cap there up 18.4% year to date. And then the Russell 2000 and the Russell mid-cap growth, the bottom there, up in single digits. It's been a much more challenging year for the mid-cap and small cap space, especially within growth versus the large cap and value space. Large cap growth, though, been challenged a bit recently, but Nasdaq-100 again, holding up well there, keeping pace with the broader S&P 500 index.
All right, and let's take a look at your next slide here. We have the annual Reconstitution, and it's interesting, Mark, with the additions and the deletes, there really is a mixed bag of sectors that you see there.
Yeah, so I mean, in terms of overall activity, number of additions and deletions, this is pretty typical for what we see for the annual reconstitutions. Just as a reminder, these are going effective after the market close today. So Monday morning at the market open is when you'll see the actual updates to the index. You won't see them quite yet at the market close today. Going down the list, we have Airbnb, Datadog, Fortinet, Lucid Group, Palo Alto Networks, and Zscaler. Interesting agglomeration of companies. You've got really three names just within the cybersecurity space. And none of these are that new. They didn't IPO this year or the year before that. Zscaler's the youngest one from 2018, but Palo Alto and Fortinet have been around for, almost 10 years or 10 years plus. And then you've got, Lucid, obviously kind of a Tesla copycat or trying to accomplish what Tesla did. They IPO'd late last year, and then Airbnb IPO'd just about a year ago. That's by far the biggest ad with a market cap over 100 billion. You look to the bottom of the screen, the 6 deletes that are coming out, a couple healthcare names. So Nasdaq-100 going to be a little bit less weighted towards healthcare. Couple consumer discretionary with Fox, which is really a media business, versus Trip.com, which is more of a travel business. And then you've got also Checkpoint and CDW coming out. You can see those market caps, though, still not too shabby, 15, 20, 25 billion a piece. To me, this just reinforces again that the Nasdaq-100 really is a pure large cap index. There aren't really too many mid caps sort of hanging around at the tail end of this, as you maybe saw a few years ago.
So, Mark, let's take a look at the performance of the 6 names that are being added into the index. It's kind of a wide range there, anywhere from about 300%, wow, to 6.5%. Explain to us, how do you get included in the index?
Yeah, so generally speaking, you've got to be in the top 100 largest market caps rankings within the NASDAQ exchange, all stocks listed on NASDAQ, excluding financial institutions. So no banks, no insurers, no real estate companies, things like that. But other than that, pretty much with a few little nuances, if you're ranked in the top 100, you'll make it into the Nasdaq-100. Lucid, as you mentioned, really kind of a roller coaster year. That company being, pretty young in terms of revenue history, right? They're mostly still a pre-revenue stage company, even though they're big enough by market cap to make it in this index. Performance track record looks way different than Airbnb at the bottom there. which IPO'd at a very, very high market cap and then hasn't really done much all year in terms of performance. The rest, they're kind of in the middle, having above average performance relative to the broader market, up anywhere from 47, 48% to about 117% for Fortinet.
And our last slide, of course, we have the companies that are being deleted from the index.
Yeah, so this one, much more of a mixed bag, actually. I was expecting to see most of these names to be negative year to date. Trip.com is by far the most negative one, down almost a third year to date. And then you've got Insight and Checkpoint also negative. The other three not having, negative years, and especially CDW having quite a strong year, but just again, with the nature of the companies that have listed on the Nasdaq recently, several of them have come in at very high market caps. They've been, well above the minimum threshold to make it into this index. And that's why you see some of these older names in that smaller low end of the large cap spectrum getting kicked out, as usual. Pretty typical December reconstitution if you compare to recent years.
And Mark, just one more question I have for you. When you're included in the index, is it typical to see the new additions trade higher or pop on this news, or when they start trading on Monday, because managers that mirror the Nasdaq-100 need to include that in their portfolios?
Yeah, so there is a slight positive impact from being included in a broad index such as the Nasdaq-100. You see it with the S&P 500 as well. Folks actually started finding out about this at the beginning of this week, or actually really very late last week after the market closed. And even before then, certain analysts in the ETF and index space kind of put out their thoughts publicly, saying these are the names we think are going to make it in if you just stack all the market caps. I mean, it's a pretty transparent methodology for inclusion in this index. There isn't a committee, as with the S&P 500, that kind of goes through the rankings and then adds a bit of discretion as to whether a company qualifies for inclusion. Here, it's pretty systematic. So I wouldn't say the effect is as positive, but yes, once you make it in, you've got the QQQ, over 200 billion in market cap, other ETFs and mutual funds out there tracking this index. It's a boost to the company's liquidity within the equity market, and that is sometimes pretty positive for their share price as well.
All right, Mark, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.